Okay, it's Friday, September 30th, and this is an end of the day SPY recap. It's also an end of the week SPY recap. And as I've discussed, we're at the end of a month and end of a quarter. So we'll look at those different time frames. This is the daily chart. You can see here we ended up with a big red day again, heading lower, closed near the low of the day. We'll show you in a minute. I'll go over kind of what developed today intraday and how it unfolded, and we'll kind of recap the rest of the week a little bit. We'll also kind of go over as always, this is the daily time frame. I look at the weekly time frame and what that means, and the monthly time frame, and it's one big kind of chain reaction. And maybe I'll also just touch upon in this video kind of how I put all of this into a trading plan, that offers high probability outcomes over and over and over again, and why I think that works. And I'll touch upon that as much as just kind of what some of the expectations are going forward here. And again, the reason, just very briefly, why the high probability opportunities exist, it's because you have to really understand what these charts are, these red and green bars and highs and lows that I always talk about, what it all means and how one time frame kind of links to another time frame, daily to weekly to monthly. Essentially, without getting too detailed or off topic here, it's because price is really just moving up and down to involve the largest number of participants it can, and that's the role of price in these type of markets. And you have long-term participants who are buying for completely different reasons than the computer, the short-term traders there's a lot of high, algorithmic type trading, high frequency trading. Maybe 70% of what you see on a given day is just computers going up and down. It has nothing to do with earnings estimates. And even if you were going to be deal with earnings estimates, think of it this way, in terms of trying to predict where price is going. First of all, you're never going to get your estimates right, because you could just look at every earnings report. They're always hitting and missing and off, and these are top analysts analyzing it. Then on top of that, once you have an estimate, you have to determine what kind of multiple the market's going to assign to that. And even though there's an average that, typically a market assigns, it doesn't mean at any given time you could overshoot, 15 PE, maybe in certain points of optimism, the market might go up to a 20 PE because it gauges that the future is, more optimistic than what you think for some reason. And people now, as prices going down, there are some people who think inflation is going to ease up a lot quicker than, who knows? They're making predictions on one hand, and then they're trying to predict multiples on the other hand. You put it all together, it's almost impossible to come up with a forecast that makes any sense. So why not just go with price action, where the various, outcomes of of everyone's decision is based on orders that are being placed, and there are different, like I said, there are different time frame participants all over the place. So that's why, when all of a sudden price breaks one level and it heads to another level, that's because orders are sitting there. And if you kind of think that, or have that in the back of your mind, that's why some of the stuff I'm talking about works. And in the end, what I've done in terms of simplifying it, let's just really keep it simple. I've made some videos on this if you go back, and then I'll get into the analysis here in a second, is if I simply look at a green bar and think, okay, if I see green, I'm expecting the high to be taken out the next day on this, let's say it's this time frame, daily chart. Green bar, expect the high to be taken out. I also look at the midpoint of that bar and make a decision as to whether or not, we do take that out, or we, in this case, go lower. Then I look at a red bar. I kind of keep that in mind. When I see red, I expect the low to be taken out, and I look at the midpoint of that bar. And I've discussed that many times of how that all works and everything else. And then you take the daily time frame, the weekly time frame, again, the red and green and midpoints and monthly time. You put it all together, it becomes kind of a chain reaction. Finally, on the just as a recap again, the way I deal with, and this keeps things very consistent, and again, I've shot many videos on this in detail, but all I'm looking to do in terms of the day, each day then within that context, is I want to look at obviously the range of the pre-market. I draw these blue lines every video, and I look how price opens, the 15-minute chart, and I can determine from that opening price relative to what this pre-market range is, whether I have a bias to the upside or downside right out of the gate. From that point, all I do is I look at the first directional move of the day, wherever that is, up or down. So that's step one in my plan. And then after it, at some point, you're going to go up early at some directional move one way or the other. And then at that point, you're going to have some kind of a pause. And at that point, I just try to determine what the intraday high and what the intraday low is after that first move. And I try to determine, are we going to attack that high or low? That's my entire game plan. Again, pre-market highs and lows as a range, opening price, first move of the day, then whatever intraday highs and lows are in place, second move of the day. So I base all this action here on the 15-minute chart. There are 26 bars. I generally judge those, conditions and see what's happening. That guides all my trading. And then I see how it fits into these red and green bars, whether expected to go higher or lower. And, at that point, and I'm looking at the midpoint of each bar as well in my analysis. And then I'm tying the daily chart to the weekly to the monthly. And that's it. And that's the game plan. And that's how all these videos, if you watch them over and over again, you get a feel for how it all comes together. So let's get to now that I've reviewed that, and at least, you kind of have an idea of what I'm trying to do, let's look at today as an example. Again, we have the red day on the downside. If you looked at this bar, daily bar for the first time today, you didn't see anything. You'd say, oh, it's a red bar that headed lower. It kind of held the midpoint of the prior day and headed lower. But you could see here, we started up on the session. We had this pre-market activity that I described that was kind of, it's kind of on the upper end of yesterday's bar. But anyway, we started up to start. So that was the bias to start the day. And then we had a directional day that was heading up and it offered some good long opportunities to start the day. Once I saw this red bar come down and then what I'm saying is once I see a first move, I look for a secondary move. And when that secondary move happens, orderly for a direction, one way or the other, you get a normal pullback and then a push to test that high again. Once I saw it wasn't doing that, that set me the bias back down to the downside to take out that intraday low, and it moved lower. And the reason I was able to be, aggressive on the short side is because I discussed overall that I was looking at 6 days here of choppiness, so to speak, and we couldn't really rally up. We're just within a range. So if we were breaking out to the upside, this pullback might have had an opportunity to get to these highs. But since we're in more of a range and since the overall trend's down, which I can go over with all these red bars, and that's kind of, what I've been discussing, then at that point, once I saw the failure for a secondary move, I was able to judge that we were probably heading lower, and that offered opportunities to get short. So in this particular day, you were able to get short, long here, and you were able to get short here in some form. I happened to trade the SPY long to start. I took some gains there, and I was short Apple and Nvidia, at this point of the day, and there were opportunities to sell down there. So that was what the day was. In terms of, for example, now the week, we see that we close with a weekly red bar. Now here's an interesting kind of another way to view it all. In other words, I was talking about the midpoint of a prior week and red and green bar. So we had a red bar from last week. I'm expecting lower this week. And as long as the midpoint of this bar was never broken to the upside, I was bias short all week, no matter what happened. Now, I've discussed on all these weekly videos how this was very choppy action day to day. And if I went day to day this week, what developed with a down, but remember, I'm biased to the downside the whole time, and because that weekly chart never crossed the midpoint. It was red and it never crossed the midpoint of the prior week. So even with all this up choppiness, I was always biased to the downside. And if I went day by day, if you go back to each video, you can kind of go back day by day, you'll see that on the first day of the week here, it was down right from the start, and that was an easy short trade. This trade started up, but because it failed at a certain point, and I'd have to look back on Tuesday, there was a down trade there. This trade gapped up, but then it started down all session. This trade was an up trade all day. So this trade, had a strong move from the start. Even though you're biased to the downside, you can still see that the intraday price action never failed and came back to those intraday lows again, and it was just an up day within a downtrend. But then you had a great down day, yesterday to start, and you had the two pushes down, and today you started up again, but it rolled over and it gave you an opportunity to take out that intraday low at some point. So it wasn't necessarily the easiest day right from the start to go short, but it offered an opportunity. So within each of these days, there was intraday price action given that whole 4-point plan I talk about, where I look at the opening price action, first move of the day, and then I determine the intraday high or low, and whether you're going to approach that or not somewhere later in the session for a secondary move. So it was really kind of clear what to do each day within the context of my trading plan. And now we open up, and then we ended up with another red. And then you see how you end up on the day. And now my expectation going into Monday is I'm going to look at I have a red bar on the daily chart, so I'm certainly expecting to go lower. Here are some targets in play in the bigger picture. There are the yellow lines. So I know if I go back to analyzing where these charts are supposed to be going relative to their prior lows lows and highs. I know there's certain targets in play. And when it all comes together, and that's if you watch my video each and every day, you see when everything aligns, where the daily chart has a target that's also in line with a weekly chart that has a target, maybe the monthly chart, and the opening, the price action either at the open or somewhere intraday aligns. That's where the high probability comes into play, because it says price is going to a certain area where orders are located, or it's failing at areas, that it should have reached where orders are located. Therefore, it's going the other way. And that's how the whole thing kind of comes together. I know that's very broad description of it all, but maybe it'll make some sense, in terms of a big picture. And then if you watch these videos day to day, you'll understand it more as time goes on. So anyway, let's just conclude here with the weekly chart is now green. So I generally like to start here, and that means I'm expecting a little somewhere, whether it's one day or another big red bar, until the midpoint of this bar is taken out. I'm expecting lower price action, next week, and I'm expecting lower price action into the month with targets here, given the month is close, and I'm expecting the daily chart even to test down. So, it doesn't mean we can't get an up opening. That'll show up here. If somehow it gaps up a Monday, you're going to see the pre-market action having a certain range and green bars to start. At that point, fine. Then you kind of watch the short-term targets, and you play that until it eventually changes. And then when it changes, that's exciting to get short, because you have all these, we still have 5 days in the week to get below here. We're going to have 30 days the next month to get below here. So there's plenty of time to get down there if it doesn't happen right away. If it starts right away, we see if it continues or fails. And that's how, it all works on each chart. So I guess I can conclude there. I mean, it's not, no secret the market's heading down. It's no secret there are still targets there, and we're expecting, at least from all these red bars on these bigger time frames, we are expecting a little lower. Will it happen the very first move on Monday, and then maybe, who knows? And we'll find out, but I just thought maybe I'd review, my general game plan, and hopefully it made a little sense. And, it shows you how on a day-to-day basis it sets up high probability opportunities. So we're going to keep the bias down for things to change. Again, let's just say we're going to have to start above, on the very shortest term bait, we're going to have to start above the midpoint of this bar and head higher. And then we see if the weekly chart can, get a 2-up bar. If it gets a 2-up bar, then you start knowing there are orders up here that might be taken out. So that's why you start staying long on that basis. But you all have to see, at that point, are you going to get through the halfway point of this monthly bar to even begin to start to think that may turn up in the bigger picture? And quite frankly, on the yearly chart, the quarterly chart, there are it looks like with 3 months to go, if I just finally end up here on the yearly chart, quarterly chart is kind of the quarterly chart, same thing. We actually end up with what looks like a shooter bar here. So we should be continuing. That is a momentum kind of shooter bar after a downtrend, which means you should be going lower October, November, December. So we'll find out if that happens. But on the yearly chart, what's interesting is, if you want to really think a little long term, is it looks like, unless anything really drastically improves, which is possible in the next 3 months. If you close with a big red bar here, this is going to be the first big red solid bar in a while, which should generally show that somewhere into 2023, we're going to head lower. All these other red bars kind of were weak red bars, and they never followed through. When you finally get a big red bar, at least even for a little while, you're going to test lower. So if we stay red here in the next 3 months, the odds are into 2023, at least for a little bit, we're going to probe lower. And, you can see here, in some cases, it could be a 2-3 year thing here on the downside, depending, how we close. So these next 3 months, it's going to be important to see how this yearly bar closes to determine if we end up with one of these little bars that you don't really expect to head lower, or if we close near the lows, then expect a little more, downside into next year. At a minimum, maybe one bar, and at a maximum, maybe for even longer term. So that's, not pleasant news, but it's something to keep in mind for the next quarter. But anyway, I'll wrap it up there. And, just summing up today, the easy the way it developed in terms of the overall bias to the downside was you did have an up trade to start. You were monitoring that to head to the top of the range. And once you had a big failure here that didn't look like it would have an orderly pause to make another push up, you kind of got back to the downside. That's the way I viewed this day. And again, I look at every single day the same way. Opening price action, first move of the day, and then whatever high-low forms, I judge that relative to if we're going to attack that high or low again. And that's how you form your bias, going forward in line with, red and green green bars, and whether it's a when it's a red bar, you're expecting it's closer to going lower than higher, and when it's a green bar, you're expecting it to go up versus down, and you're kind of judging that midpoint of each bar. But there are plenty of videos to watch on that, so I'll wrap it up there. Unfortunately, for anyone holding stocks, another negative week. We're heading down 3 weeks in a row now. There's always some exhaustion risk, but if you look at the actual channel, you still see it is possible we could be heading down to these targets before we maybe rally higher. So we'll see what forms. And I know it's a long video, but maybe by the end of the week and quarter here, it's a time to kind of look back a little bit and refocus on the big picture of what's going on, and how high probabilities do exist on a very short-term basis once you put all these time frames together and once you look at the daily structure each day on the 15-minute chart.